ASTS is trending down 6.7%. This is Friday, the 17th of October, 2025, pre-market session. After printing this intraday high of $102.7 yesterday, the 16th of October, marking 11 new highs in just 12 trading sessions since the 1st of October. This meteoric rally has positioned the stock as one of the most watched high momentum stocks in the market. But the recent pullback, yeah, this pullback you're looking at right now, not just from today and from yesterday as well. You closed the session of yesterday with a loss of 6.47%. It's now down a further 6.7%. So this recent pullback has sparked a heated debate over whether this is a healthy consolidation or the beginning of a deeper correction. The rally was supercharged by the company's commercial partnership with Verizon, which plans to offer direct to sell satellite service to its customer base using the company's low Earth orbit network by 2026. Investors see this as a major validation of the company's business model and a potential pathway to securing additional telecom partnerships worldwide. Bulls pointed this deal as a transformational catalyst, arguing that it would solidify ASTS as the backbone of next generation global connectivity, especially in rural and underserved regions. However, not everyone is convinced. Bears argue that the parabolic price action may reflect over exuberance, particularly given that the Verizon announcement lacks specific financial terms. Others are focusing on cash burn rates, the capital intensive nature of satellite deployment, and the risk of future dilution despite the company's current funding runway. The stock's high volatility has amplified both sides of the argument. Bulls view the pullback as a buy the dip opportunity in a company with first move advantage and massive total addressable market, while bears warn of potential exhaustion after such a relentless rally. With multiple satellite launches, strategic partnerships, and the march toward 2026 on the horizon, ASTS remains at the center of one of the market's most polarizing narratives, a story balancing moonshot potential against execution risk and valuation concerns. Yeah, that's what we're dealing with right now. The extrapolation is the algos are also on the side of the bears, if you like, extrapolating lower prices, going all the way at least all the way towards the 24th of October, Friday the October 24th, exactly 1 week from today, and then after that maybe a consolidation may ensue. So as things stand right now, projections are saying 103.3. It's an upper projection, 109.77, 115.63 on this 4 hour chart. Let's see what we have for the price pressure momentums. Let's see. Before we do that, I need to pick up some values. Okay, so we will try to determine the probability of it retesting 99.24. So this is not its highest price, but on this chart, that's the highest, and we have to make use of what we have. Here we have here we have to make use of what we have. We have the moving averages and all that stuff. So and the standard deviation below. So I'm just going to make note of them so that we don't come back to it since we're already here. So I'll take 99.24, and then the first moving average. The moving average we're going to use 91.14, and then standard deviation is 5.26. We are going to test and find out what the probability of it retesting 99.24 will be. It is definitely going to be less than 50%, but we don't exactly know what it is. So we'll come back to that. So what we want to have a look and see what the price pressure momentums are saying. So we'll remove this and add this one. This gives us the price pressure momentum of its 21 period moving average on this chart. So You heard me reading out saying something about exhaustion. Maybe we may see that here. Okay, so all the moving averages, these two moving averages are severely bearish. Maybe not the 40 period moving average, not here. We could still have a look. But this 10 period moving average, this 21 period moving average, they are now bearish because positions opened all the way back to 84 hours ago are now sour. They've gone sour. They're no longer good. They are, if they're still open, they are not good anymore. You know, so this does not mean that they are open. Just the fact that if they were open then, they're not good anymore. You know. Okay, so we have yeah, they are severely bearish, especially the 10 period moving average. Okay, let's see. These are the moving averages. This tells us the momentum, and then this tells us the pace of that momentum. Okay. So let's see what we have. We could just slide and like get an overview of how things have been decaying over time. Yeah, I can see. Yeah, the bearishness is getting worse, obviously, but momentum, is it getting better, or are they buying this deep or not? Let's see. Yeah, they are not buying it deep. They are buying less. It's decelerating. It's decelerating. Even though it's still there, but it's not as strong as it was earlier on. Selling pressure is scaring them off, scaring buyers off. As things stand right now. But they're still buying anyway. They're still buying anyway. So yeah, there might be some exhaustion there. There might be some exhaustion going on there. You know, but it's a time to watch to see what's going to happen. Whether a good opportunity will come up. For a very long time, for a decent length of time, the 10 and 21 period moving averages, these two moving averages were serving as primary demand lines. You can see here one was perfectly pinned on the 7th of October when it closed. So closing means after the specific 4 hourly periods. So that's when it prints. So it pivoted to the upside, and this also happened here on the 10th of October, exactly 1 week ago. Was it? Yeah, 1 week ago exactly. Yeah, it happened again. But this time around, it's will the 40 period moving average serve as a primary demand line? It has never been tested. The only time it got tested was maybe, if you like, sometime in September. It's served as one, not sufficiently, but we'll see whether that's going to be the case today. We'll see whether that will be the case today. So we are hoping, I would say hoping, we are observing to see whether the 40 period moving average is going to come up and serve as a primary demand line. I guess most people who are watching this wants the stock to bounce. Yeah. Okay. So let's apply the 40 period moving average to see what it's indicating. Okay. So it's still okay, still trending. This one is still trending. Positions opened all the way back to 120 hours ago. Still very good. Still very good. You can see, just like all the other moving averages, the derivatives are still people are buying. They're still holding up. But they may still be decaying as well. Yeah, they may still be decaying. Yeah, they're decaying. Yeah, but people are still holding up. Positions open all the way back then. Very good. Still very good. Still, it's still very much intact. So okay. So let's just see whether we can find the probability of it retesting 99.24. Okay, so all we need to do is get our Z calculator up. So here we apply this will be raw score will be our target, which is which we have as 99.24, and then the population mean, which is the moving average, 91.14, and then standard deviation, which is the value within which or with which it deviates. With this is the value with which the price deviates from the mean. So obviously, if you add this to this, it doesn't give you that, but it's the other factors that are behind this value. So let's see what we have. Okay, so as I indicated earlier, yes, it's definitely less than 50%. There's a definitely it's definitely less than 50% that it's 50% probability that it would retest 99.24. So it's a tiny 6.17, 6.18%, but within that 6.18%, a lot can still happen. A lot can still happen. So, amongst other things, the algos may have done the calculation and seen that the odds of that the bounce happening not very high, especially retesting 99.24, amongst other things. So that's what's going on right now. People are wondering if this is this is a buying opportunity. That's what they're wondering right now. But I think uh, in the interim, I don't think it's a buying opportunity yet. These have to improve. These have to improve. These values have to improve, especially this. These two moving averages. They have to improve. Buy. We need to see more buying before we before an opportunity presents itself. So the odds of it printing below this 40 period moving average is also there as well. So just have a look and see what you make of ASTS, and thank you very much for watching this video.